Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and Alpha Fibonacci method. Today's very exciting webinars. This is the last webinar of 2018, as you will see the power of Fibonacci method in the markets and how you can take advantage of Fibonacci in this very powerful, very volatile historical markets. But first, please remember, everything I do in this webinar is to educate you about price action and Fibonacci. I'm not a financial advisor. I am using what I teach for my own investments, and every single thing you see here to teach and educate you about price and Fibonacci. So, do you have heart palpitations? Do you have stress in this market? Do you lose sleep? That was me in 2007. In 2007, I thought investing on fundamentals will survive any market crashes, any news, anything, because companies are so powerful and so strong that I was holding. CNBC kept saying, don't get out of your positions, and market kept crashing. Finally, I recognized that listening to the news is not a recipe to success, that there is something drastically more powerful in the markets that I should pay attention to. In 2007, I removed all the indicators from my charts and I started paying attention to this only. This is what I recognized in 2007. This 5-minute chart on S&P. If I will remove the name from the chart, let's do a quiz in the room. Does anyone know what this is? Let's do a test. This is the most important revelation you can ever have in the markets. That every single chart looks exactly the same. Anyone wants to take a guess what this is, pretty please? So Ray says this is S&P. Anyone else wants to take a guess, please? No one else wants to take a guess? Don't be afraid. This is not S&P. Anyone else wants to take a guess, traders? No one knows? I don't blame you. What is extremely clear? What does everyone know here? This is price action. This is pure price. This is top stock on the planet that everyone here in the room should know. But if you don't recognize what stock this is, it's probably because you've been blocking your vision with indicators. As I've shown very, very clearly, this is Apple, top stock on the planet. And this is what you will see in this webinar. What happens if you remove all the indicators, if you block all the noise, what is possible if you just pay attention to this? It doesn't matter if it's 5-minute S&P, it doesn't matter if it's Euro weekly, it doesn't matter if it's oil, it doesn't matter what you trade. Price action remains exactly the same. There is no sweat. There is no heart palpitations. If you do exact same thing, you will know extremely well that market sell-off was absolutely expected. That's what's playing currently in the market, was clearly identified by price action and Fibonacci years in advance. This is what I recognized in 2007, and this is the events of the last 2 years. In 2007, when I started paying attention to price and Fibonacci only, I developed this Fibonacci tool and this Fibonacci strategy. Take a look. S&P in 2016 showing you when price will reach Fibonacci reversal zone at 2800, market will start selling off. Price spelled this out 2 years in advance. Do you know an indicator that can do that? This is what we're discussing with students every day. If you're using long-term charts, you know where price will reverse from months and years in advance. If you use day trading chart, you will know minutes, hours, days and week in advance where price will reverse from. This is 2016. 1800 number. Take a look what's in a play in the markets today. Does this look familiar? Bright green line again. In 2016, it was key support. This morning in the market, it is key support. If 2500 is out, market in free fall. In 2016, price held this support, 1800 number. And this is what played out next. Buyers stepped in. Reached 2200 number, key Fibonacci resistance. After election, bullish rally continued, reaching next target, as expected. And this is the start of 2018, when bullish rally went on as spelled out by the price in 2016. Does this look familiar? Reversal zone is reached 2 years later. This is your investment decisions. Only Fibonacci can do this. And as this chart showing very, very clearly in January 2018, this is a chart that's showing very, very clearly today, last webinar of 2018. This support is a key. 2500 number. No surprise why market sold off. 2500 is crucial. And what played out this entire year when market danced in brutal correction, chopping time and time again, showing you buyers are worthless. This is massive chop. What did we discuss time and time again? One step at a time. 2600 is crucial. This is a market in the months of November and in October. And this is the market in the last 2 weeks. Stated very, very clearly. 2600 is out, 2500 to be next. So, this is a key, traders. This Fibonacci support, 2500 is out, 2400 will follow. 2400 is next with 2200 and all the way to 2000. And again, where is the selling pressure coming from? Selling pressure coming from Fibonacci reversal zone. No surprise here, none. Just like played out in 2008. Charts are twins. What is the difference? Selling pressure drastically more powerful than anything we've seen in 2008. And again, market sold off in 08 because Fibonacci reversal zone was reached on long-term chart. Market selling off right now because Fibonacci reversal zone had been reached. There is nothing less, nothing more to the story. This is a chart now. Looks identical to 08. 2500 is a last stopping ground. Present in the room for years. This is your investment decisions. Throughout the webinar you will see exact same power of price action in Fibonacci in day trading decisions. Every single price action pattern in the markets preset by Fibonacci. the only natural predictive analytical tool in the market. Market crashes and market rallies preset by Fibonacci, independent of news, earnings, or fundamentals. Do you remember the events of Apple this year? Shall we walk down memory lane and see what Apple had done this year? Let's walk down to 2016 one more time. This is key support on Apple. Bright pink line is a proprietary Fibonacci support that show you if this support respected, market will rally. Apple comes out with the worst news in 13 years. This is Apple at the start of 2018. Key resistance in front of you. And as you see on Apple, key support 91 respected. And as you saw on S&P weekly, key support is not respected. After a year of crucial support, this support is out this week. First time this year. On Apple, this support is respected. Apple doubled in value despite worst earnings in 13 years. Apple struggled at key Fibonacci resistance and continued on to the next level. After earnings, no surprise. This is what Apple had done next. Reaching next level, showing you reversal zone is next. And that's what Apple had done, skyrocketing to reversal zone. When Apple started taking a massive pause at 216 level, identified years in advance. What happens to Apple? Apple comes out with spectacular earnings. Do you remember what happened to Apple this year? Spectacular earnings don't mean a thing. Fibonacci means everything. Because market is Fibonacci puzzle. Apple starts selling off as expected. Poor Apple. Apple running from key Fibonacci support despite worst earnings, more than double, and selling off despite stunning earnings. Why? Because Fibonacci said so. Market is flawless Fibonacci puzzle. If investing on fundamentals and earnings and indicators made money, every single person on the planet would be Bill Gates. This is Apple next. Trying and trying and trying to break through key resistance, famous 181 number, but buyers are so darn weak. And Apple continue selling off. This is Apple now. 160 is lifeline on Apple. 160 is out, Apple in free fall. Apple crashing to 100. How many dollars did Apple collapse per share despite stunning earnings? From 230 plus to 165. As of right now, almost down $70 per share. And again, Apple rallied despite worst earnings in 13 years before. Shock or not. Market is flawless Fibonacci puzzle. And that's what you see time and time in this webinar. That pure price for entry and Fibonacci for exits has exact same formula, no matter if you trade 5-minute, no matter if you trade daily, no matter if you trade weekly. Price action patterns remain exactly the same. Pure price for entry and Fibonacci for exits will give you ultimate accuracy for trade entries and trade targets on any instrument. Knowledge of price action and Fibonacci trades stress, sweat, pain out of trading. Because you are not surprised that price collapses because it came to reversal zone. No surprise whatsoever, none. Amazing to see you, Phil. So what is Fibonacci? Fibonacci is a golden ratio that was discovered by Leonardo Pisano in 13th century. This golden ratio present in everything that surrounds us. This golden ratio is what present in financial markets. Fibonacci starts with the most powerful and the most crucial number, 0. If you know where 0 is in the market, you are on the way to success. 0 is everything. 0 is the start of the trend. 0 is the start of the crash. If you know where 0 is, you are not losing sleep. 0 is incredibly important. And that's why Apple continued with bullish rally, and that's why Apple sold off. Because of that extremely important number, 0, which forms market trends. If you know where 0 is, you know where trend starts, and you know where trend will start selling off. Fibonacci retracements are highly accurate predictive levels for identifying profit targets on any time frame, which is essential in day trading and long-term investment exits. Here is the day trading chart from the trading room. What did the price show us last week? Take a look at this price and take a look at this key resistance. This is the end of the minor trend. This shown that buyers are weak. If I convert this chart to 5, exact same formula remains. Let's squeeze this chart so you will see. It's all the same. My goodness, just like 91 and 181 on Apple. It's exactly the same. What is the difference? Risk management and trade hold time. Apple was frozen here for almost a year. S&P was frozen here for a couple of days, showing you buyers are weak. This is your day trading decisions, and this is S&P weekly in 2016. 2200 number. Identical Fibonacci level, identical Fibonacci strategy, identical price action. The difference is hold time here minutes. And are you surprised of this bullish structure the last 2 days? Should not be. This is reversal zone. This is trend inception. This is a place you do not short near. When S&P rallied 30 points, this is a place you short from. This is a place you short from. Not into support when bullish rally staged pretty spectacular pullback for about 20 points again and again before market close. And if I make this chart 15, exact same formula will remain. Charts are twins. And if I would take a look on oil hourly, this is for you, Phil, you will not be surprised. Why oil sold off? Chart present in the trading room for weeks. Oil sold off because Fibonacci reversal zone is reached. And why did oil rally the last 2 weeks? For exact same reason. Ranging markets, price comes to reversal zone and buyers step in for weeks. This is day trading chart on oil. If I convert this chart to 5, 15 or 3, it's all the same. Only price action and Fibonacci can give you these crucial reversals on levels, days, hours, minutes in advance. No surprise. And if I walk down memory lane on oil, you will see it's all the same. Because the events on oil this year are no surprise whatsoever, as this proprietary Fibonacci tool, as you're seeing throughout images throughout the webinar, give you ultimate trade accuracy in day trading, minutes, hours, and days in advance, in position trading, weeks, months, and years in advance. It is not software. It is not an indicator. This tool can be installed on any platform as long as the platform has Fibonacci retracements. This tool can be applied to any instrument, any time frame. In order to use this tool, you must know setting and rules. This tool is yours forever to keep, as knowledge is yours forever. This is oil traders collapsing from key Fibonacci target. Do you remember this exact same level on S&P monthly in 2016? Except on S&P it was key support. On oil it was key resistance at exact same time. If there is a reason sell-off on oil had ended, of course, there is a very good reason why sell-off on oil had ended in 2016, as sell-off reached Fibonacci reversal zone. And this is what oil does next. Stages, bullish rally. No surprise. When price comes to Fibonacci reversal zone, this is a place where you monitor for reversal. This is a place you never ever ever short near. This is the reason buyers stepped in on oil. And this is oil in 2018. Take a look. Bullish rally reaches very powerful key green level, showing you Fibonacci reversal zone is next. Oil frozen at 64 for months and bouncing between 55 and 64 for months, and staging this next. And continue. It stands to reversal zone. What do I say when oil reached 64? 64 is out, 55 is next. Do you know an indicator that could tell you that? Did oil do that? Did it collapse to 55? Of course it did. This is oil next. This is oil next at 55. What do I say next? 50 is out, 40 will follow. Anyone surprised? Fibonacci said so. When price comes to reversal zone, market sells off completely. And this is oil now. Continue selling off. Was not able to break through key Fibonacci resistance, as buyers are weak. And again, we knew that when bullish rally had started. No one should be surprised. That's what price does. Every time, every day, no matter what you trade. This is oil now, and this was the start of 2018. Only Fibonacci can do that. Nothing else ever will. Fibonacci also shows when not to enter the markets at trend inception and trend reversal levels. Fibonacci will provide ultimate accuracy for profit targets and therefore give you ultimate profitability if used properly. Fibonacci shows when not to enter the market. Fibonacci retracements cannot be used without strict set of rules. Fibonacci removes speculation from trading. This is what's playing out in day trading. Here's a couple of examples. This is S&P this year at the end of the minor trend. Exact same level as S&P at 2200, except that was investment decisions. This is day trading decisions. Exact same significance. Exact same thing that played out in the room today. So if you know where to enter the position, if you know when not to enter the position, no matter what the news are, you're always on the right side of the market, and it doesn't matter what you trade. This is the events of Euro this year. This is Euro before at Fibonacci reversal zone, when Euro sold off from 3900 number and reached key Fibonacci support, where Euro rallied from and reached key Fibonacci reversal zone, when Euro started selling off later in the year. And this is Euro in the last few weeks. Sell-off had reached crucial point. Sell-off reached ultimate trend inception. But key Fibonacci resistance is blocking bullish rally, and that remains. And this is Euro now. Back down again to 130. Struggling in bullish correction. Buyers are weak. And this is how Fibonacci keeps you out of trouble. If you know where trend inception is, if you know where ultimate support is, you never ever ever short near. If you know where reversal zone is, you never ever ever buy into. And that remains the key. And that is crucial. Fibonacci is the only predictive tool in the markets. Fibonacci identifies trend reversal and trend inception areas in the markets in advance. On any instrument, any platform, any time frame. The only difference in day trading minutes, hours in advance, position trading days, weeks, and months in advance. The events on Tesla this year are shown very, very clearly. That news does not mean a thing. That Fibonacci reversal zone and Fibonacci support means drastically more than any news ever will. This is Tesla at the start of 2018. Tesla sold off from Fibonacci reversal zone and reached key support 255 number. Just like 91, 93 support on Apple, just like 2600 on S&P. And this is what Tesla did next. Staged impressive bullish rally from this key support. Horrific news did not mean a thing, as Tesla reached key Fibonacci reversal zone. And this is what Tesla did next. Continued selling off. Continue respecting this key support no matter how negative or positive the news is. And this key Fibonacci reversal zone remains brick wall this morning. Tesla cannot break through. Price is showing you very, very clearly. This is not the place to buy. This is not the place to enter. When word Fibonacci reversal zone is present, you do not enter into it. You monitoring for reversal. And that remains crucial no matter what you trade. No matter if it's 1 minute, when S&P sold off, just like Tesla. No matter if it's Facebook, when Facebook sold off, just like Tesla. It's all the same. And that's how you stay out of trouble. Price comes to reversal zone, you do not enter into. As you saw how oil sold off. As you saw how Tesla been struggling this entire year. And that's exact same formula remains. Fibonacci will override any earnings events, as you saw play out this year on Netflix. Outside of sell-off on Apple, outside of sell-off on Amazon, Netflix had been a spectacular reminder that investing on earnings and fundamentals does not work. Take a look on Netflix. This is Netflix after earnings. Please pay attention, because this is key support. Just like 91 on Apple, just like 2600 on S&P. And this is what happens on Netflix next. After 7 million subscribers and spectacular earnings come out, does not mean a thing as Netflix selling off. And Netflix continue selling off. And Netflix continue selling off. More and more. This is Netflix reaching Fibonacci reversal zone and stages bullish correction. There is no surprise here, because that's what price does, showing you do not short into reversal zone. Expect reversal. This Fibonacci reversal zone present weeks in advance. This Fibonacci reversal zone in a play now, just like in November. Continues staging bullish pullbacks. But very important Fibonacci resistance, not letting price through. And that's the power of Fibonacci that no indicator on the planet will ever give you. All identified in advance. All played out as expected. Just like S&P, just like Apple, just like oil, just like euro. It's all the same. No indicator on the planet can do that. Only Fibonacci can. Did you see what played out this year on Amazon? My goodness, what a shocker, except absolutely expected. This is Amazon in the last 2 months. Amazon selling off from Fibonacci reversal zone, despite excellent earnings. How many points did Amazon collapse per share? Many, more than 500. Buyers are weak, price struggling to break through key Fibonacci resistance. What do you see? Fibonacci reversal zone is present, not the place to buy, no matter how excellent and stunning earnings are. And that's the lesson this year. From Apple to oil, to Amazon, to Netflix, to S&P. Market is flawless Fibonacci puzzle. If you know how to trade pure price, if you know how to use Fibonacci, you absolutely expected that. As this is what students do in the course. The method that you saw throughout the webinar is a method I developed in 2008, and the method that has pure price for entry and Fibonacci for exit been traded by traders from beginner to hedge fund trader in US and globally since 2011. So if you come to the website testimonials page, this testimonials page tells you everything you need to know. It will answer most of your questions. As you can listen to the students from beginner to hedge fund manager, you can read Facebook reviews, and most importantly, you can see what students trade. Brad is my dearest friend for life, has an incredible holiday, been trying for many, many years. So is Herman. Time and time again, it doesn't matter. Anna trades options. So does Sam. Monica trades S&P. Ed trades options. Brad day trades. Tashi stock trades. Every single trader different instrument. Every single trader different account. Pure price for entry and Fibonacci for exits is all that matter. And if you know this, you don't have sweaty palms, as markets setting up for very powerful formations in 2019, when you should trade indicator free, without software, when you stop chasing indicators, when you stop speculating, when you actually know what price is telling you, you trade with ultimate accuracy. And time again, I see that mindset is everything, as it never ceases to amaze me when I work with complete beginner traders who have absolutely no baggage. How easy it is for them to trade this. A couple of lessons, all it takes. Beginner traders not sweating palms. Beginner traders not surprised that S&P sold off. And if S&P tomorrow at this level, you are not surprised. And if this level is out and S&P is heading here, you are not surprised. And if you start seeing powerful bullish rallies because Fibonacci reversal zone is reached, it's a really good news. But once again, it's all the same, no matter what you trade. And if you trade daily, you're probably an options trader, which is option trader favorite chart. But using every single minute, every single second on your chart is crucial to your success. And that's extremely important detail that I teach in the class even today. That market consists of 5 Fibonacci waves, if trend is major. If trend is minor, trend consists only of 3 Fibonacci waves. No matter what you trade, no matter if it's futures, stocks, or Forex, ultimate point of entry at trend inception. If trend inception point of entry is missed, second point of entry at Fibonacci wave 3. Let me show you what this means. If I look on the chart of DAX, this is how pure and simple market is. This is DAX weekly, wave 1, showing you do not trade against the trend, wave 2. No one surprised. Look at this mess, look at this disaster on DAX for weeks. But if I choose to take a look on 60-minute chart, formula will remain exactly the same. Trade wave 1, not wave 2. Wave 2, you're trading against yourself. Wave 2, firmly counter trend move. Noise, do not trade. Stay out and monitor for entry at the continuation, wave 3. And again, do not trade wave 4 against the trend. Basic, no matter what you trade. And if I convert this chart and I will make this chart pound, it will be exactly the same. Again, if I remove the name from the chart, you wouldn't know the difference. Here's a reminder again and again. To the downside, trade wave 1. Do not trade wave 2. Look how pure and simple price really is. And if you're trading against the trend and trend is minor, there is nothing else for the price to do except collapse and finish 3-wave formation. Thank you, Ken, means the world. Clear on that? This is what price does every day, every time. And if you're trading with a trend, story is very different. Bearish trend, counter trend, and bullish trend, major. Time and time again, know the difference. Buyers continue on. No 3-wave formation only when bearish trend. Look how simple price is. Time and time again, you'll be amazed how much you can see if you remove the indicators from your charts. Price is pure and price is simple. Pound dollar index. Shall we take a look on Apple? Why not? It's all the same. What is the difference? If you're trading weekly and monthly chart, this is your investment decision. Poor Apple. What did price show you? Buyers fully in charge. Look at this dance. Look at this spectacular reminder. Bearish trend is counter trend. Impulse down. Wave 2. Wave 3, noise and junk. What do? Look to buy. Time and time again. Exact same formula. Euro, S&P, oil, ETF, stock, option, cryptocurrency. It's all the same. What you choose to trade, absolutely up to you. Trade wave 1, not junky wave 2. This is one trader trading against himself, looking to buy again, and again, and again. Just not into reversal zone. Spectacular earnings don't mean a thing. Fibonacci means everything. As time and time I prove that market is Fibonacci puzzle, and buying into reversal zone, not a brilliant thing to do. What is success rate of buying into reversal zone? Less than 20%. Poor apple. And that remains the key. No matter what you trade, it's all the same. Do not enter into reversal zone. Do not trade against the trend. Buy at support and sell from resistance. Trading 101. Because of the historical events in the markets, first time ever, we offer foundations course. Foundations course, 6 weeks course, give you access to foundations of the method. The moment you sign up, you can start reviewing videos going back a few months. From live classes I teach on weekly basis, with the exception of holiday break. And if you decide to sign up during holidays, you receive 2 additional weeks, 2 study videos and modules. And if you want a lot more, if foundations not good enough, if you want to become master of price action and Fibonacci Mastery Group course, 12 weeks. I'm with students 5 days a week. This includes live classes, pre-market analysis, trading room, trading guided live trading, Fibonacci long-term trends, day trading, long-term strategies. Key classes Monday and Friday. Live guided trading Monday through Thursday. Pre-market analysis 4 days a week before trading room open. And if you would like to dive right into private mentoring, I work with you one-on-one and you have access to all group classes in Mastery and in Foundations course, when you can again review videos 24/7 at your convenience. And when I work with you one-on-one, I work via screen sharing and via instrument you choose to trade on. Right now in private mentoring, I work with Forex traders, stock traders, option traders, futures traders, traders from beginner to hedge fund manager. Every trader who trades different instrument. Choice is yours what you want to trade. Choice is yours if you want to dive only into foundations or mastery. We have only 2 spaces left at this price. After 2 spaces I filled. This is discounted 50% for holidays price. Price will go up to regular fee of 50% higher. So, any questions, never hesitate to contact me. info@fibinstitute.com and 925-257-4298. And again, if you come to the website, you can find a lot of answers to your questions. Under courses page, all details. Under YouTube, thousands of videos. And if you have any other questions and you would like to speak with me, please do not hesitate to contact me under Contact Us page. I always look forward hearing from you. 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. Please post questions. Question about VIX. Excellent question. VIX had been sitting at the end of the minor trend for the last 2 months. What do I expect about VIX in the next 2 years? This level is out, 48 is next. 48 is out. VIX will skyrocket to 56. Question about oil stocks. Let's take a look. So, this is a couple of oil stocks. Let's review. This is XOM in the last 2 weeks. 71 is critical support on XOM. This support is out. XOM in free fall until 66. As you could see, crucial Fibonacci resistance, blocking bullish rally the entire 2018. So this is stock now, setting up to break through this level. Tomorrow morning, oil news is crucial. 66 is next, no surprise. After 66, 57, one step at a time. And here's Chevron, traders. Chevron sitting at key support. Everyone seeing this? Just like S&P at 2600, just like Apple at 91. This is Chevron now. Broke through key support. Anyone surprised? Heading to 104. This is IBM in the last 2 weeks. IBM in bullish correction, sell-off reached critical point, showing you this is not the place to short. IBM in massive bullish correction. Bright green line is a problem. Buyers are weak. This is IBM right now, reminding you, do not buy into bright green line. When price sold off from this level, buyers are weak. And here's Microsoft, dancing at key support. 117 is key resistance. Key reversal zone, not the place to buy. So this is Microsoft right now, traders. 100 is crucial support on Microsoft. If this support is out, Microsoft heading lower. So, what looks extremely bullish in the markets right now are bonds. And again, where will bonds have a big problem? At this bright green line. No surprise that bonds are rallying because Fibonacci reversal zone is reached. No surprise why bonds sold off, because Fibonacci reversal zone is reached. Time and time again. It's all the same. So, I hope I inspired you to master pure price, as only knowledge of price action will remove sweaty palms, heart palpitations. Only Fibonacci can show you where market heading to in advance. Only Fibonacci reversal zones can keep you out of trouble. Only Fibonacci support and resistance show you what not to enter into. Days, minutes, hours in advance. On short-term charts. On long-term charts, weeks, months, and years in advance. Choice is yours. What you decide to trade. Tomorrow in the room, the event on oil will be extremely important. As we reviewed chart on oil again, here's oil again. As again it's shown on recording, we already discussed oil. This is where oil heading to. Poor oil. Oil will take a pause at 42. 42 is out, oil heading to 40. 40 is out, 34 is next. 34 is out, boom. Oil may be at 10. Oil shown you very clearly this week. Terrible bullish weakness. And again, this chart present in the room for years. This chart once again reminding you, when price comes to reversal zone, bullish news does not mean a thing. Fibonacci means everything. Do not buy into reversal zone, monitor for short. Remember the start of 2018? When price was at 63? showing you 77 is next. And that's oil next. Again and again and again. When I said months in advance, where oil heading to? No surprise. Reversal zone, not the place to buy. So, we're in for a wild ride in 2019. Stop heart palpitations, stop sweaty palms. Become the master of pure price. And if you do, the sky's the limit. So please review the information on the website. And if I can answer any of your questions, do not hesitate to contact me. I always look forward to hearing from you. Thank you, traders. Thank you so much. I wish you incredibly prosperous, incredibly abundant, sweat and heart palpitation free 2019. Because this is the key. So start your 2019 with this, and you will be amazed how much you can see. Because every single indicator on the planet developed after this. And what I share with you in the course is reminder, not one chart on my platform has an indicator, not one. And that's your shortcut to success. Taking the course. Pure price for entry and Fibonacci for exits. Choice is yours, what you want to trade. Is it Apple? Is it S&P? Is it oil? Is it euro? Is it pound? Is it cryptocurrency? Is it ETF? Is it stock? Is it option? It's all the same price action. Only difference? Risk management and trade duration time. But price and patterns exactly the same. Go to the source and master what indicators developed after. Stop the chase. Become knowledgeable trader. Thank you, traders. Adios, everyone.